As the holiday season quickly approaches, you may be thinking about whether or not you should be giving gifts to your clients to celebrate the holidays or to celebrate another good year of business. Being a small business owner, though, you may also be wondering what sort of tax implications there are for giving gifts to clients or other businesses. You may be questioning if you can write off the entire value of the gift or even a portion of it. And these are good questions to have, because we know that anything to help you out when it comes to tax time is always appreciated. As with a lot of things when it comes to taxes, the short answer is, it depends. In fact, with regards to gifts, there are a few different answers that we need to cover. The reason for this is that you simply don't want to raise any red flags at tax time, and if you're off spending tens of thousands of dollars on client gifts, you'll probably have someone knocking on your door asking questions. But that raises the question, what is a reasonable value? We'll cover this in today's video. Tax implications of giving gifts to your clients. What is a reasonable value? This is subjective and it really depends upon your business. The value of the gift should be proportionate to the revenue of your business. For example, if you're a business that only nets a few $100,000 of business, you probably won't want to be spending thousands of dollars on gift baskets for clients. In fact, a nice card and maybe a gift card at Tim Hortons or Starbucks would suffice. However, if you're a large company that nets $10 million each year, these gifts can be a little bit more lavish. According to the CRA, you may deduct all reasonable business expenses from your business income on your tax return. As with anything related to the CRA, there are guidelines around what is deemed reasonable. Gift giving. One popular way to give a gift to your client may be taking them out for dinner or even treating them to a Canucks game. You may even choose to give them your tickets so they can take a friend. Regardless, according to the CRA, this type of gift is considered to be an entertainment expense. This rule applies if you're giving coffee cards or gift cards. When it comes to these entertainment expenses, you can deduct up to 50% of the lesser value of the following amounts: the amount you incurred for the expenses, an amount that is reasonable in the circumstances. This is something to keep in mind if this is your gift of choice. There are a few exceptions to this rule that could allow up to 100% of your bill as a deduction, but they certainly would not be considered gifts. Another option could be organizing an event, such as a customer appreciation event. Even though you may be offering food and beverages at this function, the rules may fall under different guidelines. This event may actually be considered to be advertising, so you'd be able to write it off entirely, within reason, of course. When it comes to giving your clients gifts, what can be used as a deduction is any cost that adds value to the gift itself. Things such as postage or wrapping are not considered to be adding value, therefore are not deductible. Even though the CRA may believe that the rules are clear on gift giving, again we suggest it's always best to check with your bookkeeper so that you don't run into any problems at tax time. Another option for providing gifts to your clients comes in the form of marketing. In some cases, you're able to write off 100% of the cost of the gift when it's considered to be a promotional expense or marketing for your business. If your company has swag that you want to gift to your customers and it's deemed to be a reasonable business expense, you can write off 100% of the cost. Giving gifts to employees. If you're planning on giving gifts to your employees as well, there are a different set of rules where they are concerned. The Canadian Revenue Agency does allow for the giving of non-cash gifts to your employees as well as awards. An award is considered something that is given to a limited number of people or an individual, and they need to have done something above and beyond to receive it. The CRA will allow you to gift an employee up to the total value of $500 annually. For example, if you decide to give a gift to an employee of a surfboard for their birthday and the fair market value of the board is $600, you'll be able to write off the first $500. This will be a taxable benefit of $100 to the employee, and they'll be responsible for that. Another thing to keep in mind is that the cash and near cash gifts are always a taxable benefit for the employee. A near cash item is something that is similar to cash, like a gift card, or something that can be converted to cash, like a stock. As with everything, when it comes to bookkeeping in your business, make sure that you keep track of all your receipts when you're gift giving. It's also beneficial to make a note of who the gift is for and what the purpose of the gift was, so that you're not trying to figure out at tax time. Your bookkeeper will appreciate it as well. Need help from an expert? There are many different rules when it comes to gifting, deductions, and tax implications. Let one of our experts at Valley Business Center help. For over 30 years, Valley Business Center has been providing comprehensive bookkeeping, payroll, and tax services to our clients in Whistler, Squamish, the Sea to Sky Corridor, and Metro Vancouver, BC areas. Valley Business Center provides reliable and effective services to all clients. Don't forget to hit that subscribe button, and also remember to click the notification bell to get more helpful information. Thank you so much for watching.